Hi gang, welcome to the Manatee Appreciation Day edition of our CPA News Update. Bill Sheridan here from the Maryland Association of CPAs and the Business Learning Institute. Here's a quick look at what's happening around the profession today, Wednesday, March 30th, 2016. First up, U.S. citizens who owe money to the tax man might soon be barred from flying out of the country or even out of town. Two separate federal government policies are converging to make traveling difficult, for travelers in the unspecified future. Buried in December's Fixing America's Surface Transportation Act is a provision that gives the IRS the right to have the State Department deny or revoke the passport of a taxpayer that has a delinquent federal tax bill of at least $50,000. Meanwhile, an anti-terrorism measure called Real ID, which sets minimum standards for states that issue licenses and state identification, may mean tax delinquents flying domestically could get caught up in the IRS dragnet as well. You can read more about that at cnbc.com. Elsewhere, a state Senate committee decided to put off any action on proposed tax breaks for Maryland manufacturers until at least next year, deciding there isn't enough time before the end of the 2016 legislative session on April 11th to craft that legislation. Without an up or down vote, the Budget and Taxation Committee shelved proposals by Governor Larry Hogan and Senator Roger Mano for tax credits to stimulate the manufacturing sector. The panel's chairman, Senator Edward Casimir of Howard County, said he might form a work group to study the issue before next year's session starts in January. You can read more about that on the Baltimore Sun's website. Legislatures in Illinois, Louisiana, and Washington are considering bills that would allow out-of-state CPA firms to perform attest services for in-state clients without first having to register with the State Board of Accountancy or pay fees. The American Institute of CPA's State Regulation and Legislation team is also working with other state CPA societies to get similar bills introduced in their legislatures in 2017. Read more about that at aicpa.org. Financial Accounting Standards Board has issued a new standard that is designed to make accounting for share-based payment transactions less complex for public and private companies. Accounting Standards Update number 2016-09 affects all organizations that issue share-based payment awards to their employees. Areas of accounting for share-based payments that the standard was designed to simplify include the income tax consequences, classification of awards as either equity or liabilities, and classification on the statement of cash flows. The Journal of Accountancy has all the details. 1 out of 3 internal audit departments worldwide are now outsourcing at least some of their work to a third party. That's according to a new study from the University of Wisconsin-Madison's Wisconsin School of Business. That study found that North American companies are leading the trend, with 56% of responding companies admitting they rely on outside services. Read more about that at accountingtoday.com. Also from Accounting Today, the Internal Revenue Service has made progress on implementing information security controls, but a new report from the Government Accountability Office finds that weaknesses in the controls limited their effectiveness in protecting the confidentiality, integrity, and availability of financial and sensitive taxpayer data. Again, more about that at accountingtoday.com. Securities class action lawsuits, including claims against auditing firms, have reached a 5-year high, according to a new report. 80 securities class action settlements were approved in 2015, the highest number since 2010. That's according to Cornerstone Research's new report. Total settlement dollars rose to more than $3 billion last year, an increase of 184% over the historic low of 2014. In 2015, 35% of accounting-related cases had a named auditor defendant, representing a 50% increase over the previous 10-year average. Again, Accounting Today has all the details about that. The presence of anti-fraud controls, such as management reviews and telephone hotlines, can greatly reduce the damage done by fraud schemes, and the use of such controls is slowly on the rise. Those are two of the trends identified in the 2016 report to the Nations on Occupational Fraud and Abuse, released Wednesday by the Association of Certified Fraud Examiners. The fraud examiners who participated in the survey estimated that the typical organization loses 5% of revenues to fraud in a given year. The losses caused by fraud reported in the study totaled more than $6.3 billion, an average loss of $2.7 million per case. That average was boosted significantly by the 23.3% of cases with losses of $1 million or more. The median loss was $150,000. Organizations seem to be getting the message too. The percentage of organizations using hotlines, for example, topped 60% in 2016. That's up 9 percentage points since 2010. And organizations also increased their use of fraud training for employees, anti-fraud policy, and codes of conduct. You can read more about that at the Journal of Accountancy's website. Finally, we have a great webcast coming up tomorrow. It's called Financial Forecasting, Planning for Success. With CPAs constantly being asked to plan for a company's future, forecasting is one area in which you can demonstrate your value. This course provides the tools necessary to project the balance sheet and statements of income and cash flow. The webcast will run from 1 to 4:40 p.m. tomorrow afternoon. Get details and register at macpa.org. That's it for today, folks. Have a great night, and I will see you tomorrow. Take care.